Hey, what's up, guys? Hope you guys are having a lovely Thursday. Let's get another banging video coming with you live. Let me just snip this real quick. I just want to save it as a BTMM setup. Absolute banger of a setup. So I took CADJPY, so we'll start with that one. Obviously, these pairs show heavy correlation. So they're going to be doing the same thing. You know, if we look at some of the other pairs I sometimes trade, didn't really do too much. Really, just I don't know, just stagnant. Like not even like stagnant movement, just movement I wouldn't particularly like in general. So we avoided the kind of the check boxes and stayed away from those trades overall. Two probably predominantly traded pairs right now are CADJPY and USDJPY. So let's start off with CADJPY. So this is a great setup that comes out of the Asian range. It completely melts and sells down for 30-40 pips. And we get a nice, we expand over TDI here, are a little gassed out at the bottom, which is another significant factor. We have stop hunt boxes getting hit, retail traders getting, therefore, mitigated out, pushed out. Getting a lot of, like I said, if you have a lot of sellers in the market, it means you have to have buyers coming in. There's just no way. It's just how liquidity works. So when this is selling down, what's happening when this is sharply I would call it like a VWAP or a V-shaped shift, and market momentum shift. And the reason for that is because when this move is happening, a lot of people, let's call them breakout traders, they like to trade out of the range. So if you look and expand this out, you can see that this has been ranging since, all week in this is a liquidity area. So if we just wick everything here very lovely overall, you do the check the dots, it's hit here, it's hit here, it's hit here. So that's where we want to draw it. We want to hit it where it literally hits every single line. That's good enough for now. But you guys get my point is when this is selling, this is trapping, and it's coming out of here, especially when this bar fills here and it hits a yearly low, which is right here at 103.335 in particular, and that's breaking and that's holding a good candle. There's a lot of people that have sell limit orders that are just waiting, that are just sitting there for liquidity. So when it hits, snatches of liquidity, it's getting them entered in the trade, and they're going for their pips because it's breaking out. The fact of what actually happens is this ends up being smart money. I don't even really like using that term. Banks or market makers just make a ton of money off that because that ends up going, and then they're like screw that, I'm gonna shift you in 4 little light bars. And I'm basically what that does, if you drew a rectangle around this whole parameter, is that let's see, however, it's been stagnating over an entire week so far. But if we just look here, 1 2 3 4 1 2 3 4 2 3 4 4 hours, it's basically 6 hours of work, and that's what you got to be. This is the big picture. It's this right here. It's all this work that's done here, particularly here and down. And so this is 6 hours of work, right, from here to here. And the market maker is like, screw you guys. I got you luck today. 1 2 3 4 1 2 3 4 5 6 7 8 8 bars. That's 2 hours. 2 hours and a half, man. And literally look what happens. It's 2 hours and a half completely wipes out 6 hours of play, and that's entirely how market makers work in this market. So overall, I like to really go in depth on that because I think it's very thorough too. Entry point, you could theoretically get in here, and the reason for that is if we actually draw from the wick to here, up to here to the main, which is perfect. That's exactly 50 pips. So 25 pips is going to be right at the equilibrium, which is what I already had drew up on the 103.378. Had it there. So, if you, some traders might have gotten here out of a blue EMA breakout to there. It's 12 pips. Ideally, I wouldn't. I would wait for this because I'm very stagnant on how this market cap works. And maybe if I didn't exit, and I for example, I start to see that this candle's broken out of this green candle, that's when I'm going to get out, and then I'm going to wait for this to come back up. And when we are getting these like bars, these other candles in here that are wicking perfect out of liquidity and holding that equilibrium, that median equilibrium as we'd call it, that's when you should be buying in again. And then you're going to go for the Mayo again, and that's 20 pips. And if you really, oh my god, I just messed things up. Sorry guys, give me 1 second. Give me 1 second, guys. Let's just pull up USDJPY. I don't know how that just happened. And then CADJPY. Sorry about that, guys. I'm gonna pull these up. Gotta pull 15-minute time frame. Oh my lord, I'm just start away. Well, Stargo boys. What do you say? So yeah, let's get that chart back and stop on and regress it out. So yeah, overall, boys. So yeah, basically what happens is we end up it deleted my line, but this wasn't the one we were looking at. No, that's obviously way too many pips. So it was 25, wasn't it, from bottom to top? Or wait, I'm so confused. What's going on right now? Oh, never mind. It was wait, what the heck? I thought I had this real quick here. Oh, it's from here to here, right? Yeah, there you go. My bad. Sorry, guys. I was just like really confusing myself. 25 pips. So yeah, overall, you know, you re-enter off wicks. Like I was saying, the other take profit could be up here. I wouldn't really go for that. Probably go for some like smarter play. You know, this is liquidity. This is liquidity. I'm gonna go a little bit less. You know, wick right in here. You know, somewhere like where this like wick is. Go across. There's your take profit. You know, you got a 35 pip trade. Absolute beauty. USDJPY is going to do the same thing. It's going to go. It's going to kind of fold like a. This is like honestly like an extended out W. It's like first leg, boom, second leg, third leg down. So there's first leg. It kind of wops. There's the leg. It breaks. That's where you could buy. Ideally, your take profit would be like Mayo, so you may like take a little bit off. You might miss there, but you're only going to get like 13 pips drawdown. And you're going to go back up and take profit if we measure these ratios out. And look at this. See, 970. So that'd be 450 would be 900. And you'd have another 35. So, or wait, 450 would be 900. You have another 35. 485 would be around equilibrium range, which is printing exactly right. I love that. I love to see that. And if you didn't take this, you know, you missed out. And honestly, like a lot of these I do hold to like Mayo, or like I like if this was here, I'd target like a little bit lower. So it would have missed, it would have wicked. But if you bought in here, man, you got in early. That's not a big deal because you're only going to get like literally 15 pips drawdown, and then you're going to literally get like a 40 pip trade. And I would exit out there. So yeah, overall, that was the trades for today. I know I kind of like sped up, and we had that pause, and I had to reload stuff. Sorry about that. It's probably a little extended video, but I also said I think get like Happy Wednesday. I think it's Thursday today, guys. 5:22. Sorry about that. Hope you guys enjoyed it. Like if you did, like, comment, subscribe. Please be sure to check out my BTMM signals page. Check out the free trial. You're absolutely welcome to come in. Check out the trades that are called in live time. I feel like I'm the only one doing it, so give it a try. Give us a good rating. We appreciate you guys, and thank you so much for the support. Hope you guys have a great rest of the day. See you later. Peace. I'm out.